Today, I am going to show you how you can make $100 per day trading gold. This is good business to make $100 per day, Monday to Friday. Stay tight, watch to the end of the video. When we return from the break, I am going to go deep into showing you my strategy on how you can achieve $100 per day. So the most important thing is you mastering your strategy. So when it comes to trading, especially when it comes to trading gold, do not go against the trend. Do not go against the trend. When it comes to trading gold, I tell you, SMC does not work. The only thing that works with gold is fair value gap, and it's not all the time. So I want you to master this strategy. Even if you want to go against the trend, do not be greedy. Know when to stop, because market will not just buy and buy and buy. It will, in every buy there must always be a sell. So in every sell there must always be a buy. So when you want to go against the trend, that means your eyes should be open to know when to come out of the market. And of course, gold respect zones. If you're trading counter trends, so you should know that every zone counts. So take for instance, let's look at the previous market, what happened here. And I'm going to give you a secret, a strategy that you can use to be making money with gold on a daily basis, even if you're just using 0.01 lot size. So it doesn't matter the amount of money, you can trade gold even with $10. You can trade gold with any amount of money and you will make profits, so long you know or you how to play your game and you have mastered the strategy. So now I want to give you an example of what happened here. So you see that the market was trending down. So of course this is a typical example of a counter trend. Take example, look at what happened now. There was a double top. So of course, double top, double bottom, they all work when it comes to gold. It works, but not all the time as well. So look at this double top, and it respected it. Double top, it started selling. It broke the first zone. It broke the first zone here, which is this. It broke it. It retraced back. It broke the first zone here. It retraced back to that same place, and it started selling. And it broke this other zone right here. As soon as it broke it, it retraced back again, and it continues selling. So take note, this is 1, this is 2. Then it broke the third one. Once market has broken 3 times, 3 zones or 3 levels, is it, don't push it. At times it can break 4, 5, but when you're trading counter trend, once it break 2, just exit. And if you push harder to go to 3, exit. Because the next move will reverse. So look at what happened now. So, and even if you want to continue, as it broke here, this level, you see that it created a high. So the way I like to trade, and that is the secret, is that observe the highs and the lows. The highs and the lows matters a lot when it comes to gold. So look at, it created a high. So what I am looking at is that, okay, there's already a high and there's a low. Is it going to break this high, or is it going to break this low? If it break this low, it means it's going to continue pushing down. But if we fail to break this low, it means, if we fail to break this low and then break this high instead, it means that it can't push down again. It will start pushing up, because the trend of the market is uptrend. So you should always remember this, that whenever you're trading any pair, especially gold, I am talking about gold because gold is my major, so I know all the secret when it comes to gold. So, and if a beginner trader and you want to measure in gold, you can sign up to my mentorship, and I will mentor you on how to trade gold and measure in gold. I love trading gold because it moves fast, and a pip is 10. So 10 versus 1, you see the gap. So if I'm making it, I should make it. If I'm losing, then I know I'm losing. But I must make it. So I should have to be sure to make it because before I take that step, that leap. So once you create high and a low, I'm watching the high and the low. Even if I don't want to exit. So the moment a high is broken, if I'm trading the counter trend, I will exit immediately. But if, like, for example, as it broke this low, so what I will do is that is either I exit or I continue. But remember, I told you, once it has broken the first level, the second level, and the third level, after the third level, just exit because this is counter trend. Now I'm going to talk about the trend itself proper, because that is where we're going to. Remember, we're talking about making $100 per day. It can be more, but at least $100 per day, you're sure of it. So what you do is that as it broke this level, then you exit and you're watching the market. You're watching the market to see if it will break any high or any low again. So you see it created this high here. Of course, there's already a low here. So I'm watching, is this market going to break here, continue breaking here, or is it going to break this very place? I'm putting line just to make the work clearer and for you to understand it more. So as soon as it breaks here, I know that it's not yet time for me to enter for a buy because I'm waiting for buy. Now if it breaks here, this up resistance zone, because this is a buy candle and a sell candle, a buy candle and a sell candle makes up a resistance zone. So if it's a sell and a buy, like this is a sell candle and a buy candle, that's a support. So this is my support, why this is resistance. So I know in some other people charts, this buy candle could be green and the sell candle could be red. So I'm using buy and sell, so in order not to confuse you, because my color is different. My buy is blue while my sell is black. So once a market creates a buy candle and a sell candle, that's your resistance. And if you create a sell candle and a buy candle, that's your support. So these are the things you're looking at. You're looking at, is it going to break support or is it going to break resistance? Because when it comes to trading, you must have patience. Patience must be in place. Patience must be in place. So, and you must always have control over your emotions, not to, jump in or make mistakes. So stick to one strategy. Every strategy works, but if only you can stick to one strategy, you will make a lot of money in the market. No matter how it may try to, speak something else or show you something else different from your strategy, you stick to it. If you make loss, fine, you go again the next time, but if not, you move and it's building you. So you're looking at the resistance and the support. Is it going to create resistance, support? Resistance is high while support is low. Is it going to break? So that's my strategy, is high low break. If it breaks this resistance, which is a high, then I know that that's my entry confirmation, so for a buy. So as soon as it breaks this high, it breaks it, then I enter on the next candle and enter on the next candle aggressively. You know the drill, I am all aggressive trader. I enter aggressively, then your stop loss should be below this very candle if you're using stop loss. But for me, my stop loss, where I would like to put my stop loss, is below this low. Of course I don't use stop loss, but I mark it and I'm watching. That's my exit strategy. That's my exit plan, where I know that if a candle breaks past it with the body, I'm exiting immediately. You don't have to hold loss when it comes to gold. Once your strategy fails, just exit. Don't try to hold it. Exit and re-enter again in a better setup. So as it broke this resistance level, I entered on the next candle aggressively, and you see that it started pushing back, no worries. After some time it started pushing up, and as soon as you broke this level, this next resistance level, I entered another position. That's how to stack. You enter another position and you're watching, is it creating more resistance or not? This very trade was a very easy trade, a very easy setup to trade. So as soon as he broke this one, you enter again another position, and he broke this level again, you entered again. So let me be marking it so that you understand what I am talking about. So as it broke this level, I enter another position, and then look at this level. What happened here? You broke this level, I entered another position. You broke this level again. That's why you see, that's why it's good to enter aggressively. As I enter this position, look at it, started retracing back, no worries. Where you're looking at, your stop loss is below this candle. If it takes it out, then you know that the market is changing for you to exit. But that does not mean that we are changing from buy to sell. So as soon as you break this level, look at, as soon as you break this level, you enter aggressively on the next candle. And you see, added one position. Let's assume you're using 0.01. One position, second position, third position, fourth position, fifth position. As soon as you break this fifth position, you broke this one, this level again, you added another position, that's sixth position. You entered on the next candle aggressively, you broke this level again, you entered on the next candle aggressively. As you're entering, as you're trading, you're watching your left to know when it will break a major resistance. All these ones are minor resistance, so these are major resistance. This is a major resistance. Why is it major resistance? Because it broke a level. It broke a level. Any high that breaks structure, so this high is a major resistance because it broke the structure. So there's a break of structure. So you're watching to know when it will break this structure. So when it breaks this structure, this is a major structure. When it breaks it, you know that the retracement is going to be deep, it's going to be more. So as soon as you break this major resistance, that is your final take profit. You exit the market, and then reposition for another setup. Or if you want to hold your trade, you can exit all other positions that you added and leaving the first position, to keep running. So as it break, because this is a high that broke the structure, so this is the origin that broke structure again. This is a major resistance, so you'll be watching this resistance to know when it will break. So as soon as it breaks this resistance, this very resistance, you enter aggressively again on the next candle. This is the next candle. You enter again aggressively on the next candle. So the reason why I like entering aggressively when it comes to gold is because of the retracement can mess you up. You may not know how long far it's going to retrace. Of course, if the drawdown is not going to be much, but if you want to be watching your trade, you can just wait for retracement like it did here. 2 candles, you entered on the third one. So because when it breaks like that on a major resistance, it will come back to retest that zone, which it did here. So you see, it came back to retest it immediately. So this can be your next entry. So enter again, and you see started doing the same thing again. As you break this level, you enter again, you enter aggressively, and then you see that as you entered, it came back again to that level. Fine, no worries. You're looking at this low. When it breaks this low, then that will be your exit.